Hey, what's up, guys? Hope you're doing well. Hey, sorry, I don't have my fancy backdrop. Having some issues with my video recording software, so just doing the old reverse camera video action today. As a reminder, this is not financial advice. I'm your financial advisor, but this video is sent to everyone at once, meaning it's for your entertainment, it's for your information, it's for your education, your perspective. But my financial advice to you is specific to you. So always feel free to reach out if you want to talk more about any ideas that I'm sharing or any updates on your finances. Would love to have those conversations. So let me recap Q4 for us kind of briefly, because I have a few other videos I want to send out about a few specific opportunities. So Q4, big picture, strong quarter, strong finish to a strong year. And the S&P 500 eclipsed all-time highs just barely, but from a technical analysis perspective, it pretty much got rejected. It doesn't mean it won't retest it, but it's, again, still not at a, oh, we are in a new bull market, bona fide, it is a breakout scenario. I would not describe it as that. It's still very much like I've been describing, some widening cracks, some juxtapositions. On the bullish side, you have a lot of liquidity, you have technological breakthroughs that are tailwinds, and on the headwind side, of course, inflation and just the reality of the economy. I think any everyday person knows that these are not like the best times ever. Most everyday people are in the worst times they've ever been in. At least if you're young enough to where you weren't punished in 2008, 2009. Certainly the Gen Z and millennial workforce feels like this is the toughest they've seen it. So overall, excited about the quarter, of course, and some exciting things within just your calendar year 2023 is really that some names performed particularly well, while other names had pretty much little to no performance to them. That's an exciting thing to happen, because if your overall portfolio went up 40% in the past calendar year, but your 30%, 40% of your portfolio was flat, that is encouraging if you have a high conviction that that 30, 40% is still in a very bullish position. In other words, it's a delayed breakout. Not every company goes up at the same pace. But if you know that, hey, sooner or later, you can't know positively, but if you have a pretty high clarity, pretty high conviction, sooner or later, XYZ companies are going to break out. They're going to hit this inflection point. They're going to reach kind of a new technical analysis high, a new perspective, a new momentum. Then to have still outperformed in 2023, even without those XYZ companies carrying your portfolio, it's just it kind of like multiplies or magnifies the impact of when those companies do break out. Normally, if you have, a concentration in some names that haven't performed yet, that's going to drag your overall portfolio, and then you will catch up and then leapfrog if those high concentration names do pan out in that kind of 5-year window you're looking at. But to have your overall portfolio still outpace and you haven't even had that leapfrog leg yet, it's a really, really exciting place in terms of the overall positioning of your portfolio. So that's kind of talking at a high level. Economically, the main event from Q4 is that the Fed lowered interest rates. Now that is, again, not woohoo, new bull market, here we go. Historically, every recession has been preceded by an extended period of time where the Fed was raising rates, and then the Fed started to lower rates, and then recession. So historically, it would certainly seem to confirm what people are experiencing, which is that these are not great times, these are rough times. And even though it's been still great times from a big corporation perspective, the tough times of Main Street, of the everyday man, it's going to catch up to Wall Street. That seems to be more likely historically now that the Fed has started to lower interest rates. Usually it's quote unquote too little too late. It's a sign of things to come, in a sense. Now, from a stock perspective, go back to watch Q3, because you may be tempted to say, oh, a recession's probably coming, at least from a historical analysis perspective. Oh man, let me pull everything out now and then buy back in a year. I would absolutely not recommend that. I would not. The volatility is going to be good for us. The only thing that we don't want, like I've said, is just more and more sideways trading. That is not the end of the world when that happens, but it just delays the inevitable. It makes it to where you have to be patient for longer, and none of us like being patient, right? We all want to triple our money in 2 months. Just kidding. That would be, hopefully you don't want that. That would be insane. But I do anticipate 2024 for volatility to increase. There's still those bullish tailwinds. But I think overall the economy, I would say, like, really probably this year, but I'd say within the next 2 years, we'll see some significant movement to the upside or the downside. And either way, I think you'll start to see that in your portfolio. So more choppy waters ahead, more volatility ahead. But I'm excited, really anticipating some exciting things within your portfolio this year. So normally you want to keep your vision at least 5 years out. We don't really make investment decisions based on timing something within a 12-month window. So I'm really not trying to hang my hat on predicting when things will happen. That is the last thing I really want to be associated with, is trying to predict timing. When does blank happen? It's far more important from a financial perspective, from your portfolio's perspective, not to know exactly when something's going to happen, but to have a good idea of what is going to happen. If you can just make a couple right decisions, you will outperform as long as your investment dollars back up those decisions that you've made. But if all you're doing is trying to time, then statistically, historically, you're going to underperform if you're primarily focused on trying to time the market. They've said it's not about timing the market, it's about time in the market. You've probably heard that before, but if you haven't, here you go. So I'm going to pause this video and I'm going to dive into a couple specific things that I'm looking at, but really excited for this year. Hope you are too. I wouldn't say this is the best time ever to be putting money in the market, but it's also definitely not the worst time. It is kind of like the calm before the storm, except now we can like see the storm clouds, and we don't really know if this storm is going to send us higher or lower in the near term, like very short near term. But if you reference my Q3 video, you'll know that if we do get sent sharply lower in the near term, I do think it will have a positive overall impact on your portfolio, not just in a 10-year out type of time horizon, but through negative beta companies, something that I think will propel us. So I'm excited, really, just really highly anticipating this 1 to 2 year window, even though, again, normally you want to think 5+, but I really think these next two in particular, we're going to see a lot of movement. So hopefully you're along for the ride. If you get motion sickness, you get tired of the volatility, you're not particularly interested in upside, please let me know. We can reallocate. It'll still be volatile no matter what. If you have investment dollars in anything, because every investment is a risk, every investment has price changes. But from an investor perspective, it's not so important what happens to the price day to day. What's much more important is what's happening to the business, the actual asset that you own. What are the developments? And so that's why I'm listening to earnings calls. That's why I'm reading 10Ks. That's why I'm doing research on a week in, week out basis for you guys, so that I can know that, hey, regardless of what someone's willing to pay me for this company today, I know that this company is on an amazing path. It's going to be worth far much more in the future than it is right now. And so overall, I feel really excited from a company to company, position to position basis. As I look at your portfolio, I'm thinking, yes, we own some land with oil in it, but not everyone knows it has oil yet. And once they find out, then it's going to increase the value of this property significantly. That's kind of where we're at from a company perspective. There are some things these companies are doing that the general public doesn't fully realize yet, and once it becomes common knowledge, once it passes proof of concept and starts hitting bottom line, it's going to change the valuation in a step up basis, not just in a percentage growth basis. I do think we own things that will be repriced in an appreciating sort of way within these next 2 years. So let's see, guys. Thankful for you guys. Talk to y'all soon.